Welcome to the Payment Strategy Show. I'm Becky Kopplin, VP of Payments at Rainforest. We help software platforms embed payment processing into their core product to grow revenue and improve customer retention. And I am excited today to have with me Shirley Hsu. Shirley is VP and GM of Payments at Freshbooks. Shirley, thank you so much for joining me.
Thanks for having me, Becky.
I have this theory. I've brought it up a few times on the show, but I'm going to ask you the question as well. I have a theory that no one gets into payments on purpose, and then once you're here, you can't leave. Help me kind of validate my theory or prove me wrong. How did you get into payments?
Yeah, definitely excited to share that story. I think you're absolutely right. Nobody gets into payments just by choosing to go into payments in university or anything like that. There's no such subject. But before I get started, I want to tell folks a little bit about who FreshBooks is before
Love it.
set the stage on the conversation. FreshBooks is small business management software, and we primarily focus on financial management software for small businesses with a special focus on service-based businesses. So think consultants, creative IT agencies, constructions and trade, less physical goods, more service-based because there's such special needs. And we focus on financial management software, and this is why we're talking about payments. Is because we're really good at it, right? Think accounting, bookkeeping, expense management, payments, payroll, cash flow products. Those are some of the things that we focus on. And so with regards to your question, how did I come into payments when no one really, when no one is a little kid saying, I want to be a payments expert, you want to say, I want to be a doctor or a lawyer,
Right.
a hairdresser. I came into payments during the time of the mobile wallet boom. So Apple Pay, Google Pay, P2P was blowing up. So Venmo, Zelle, at the time, really similar to the AI trend that is happening now. But I saw it and I said to myself, this is so cool. It is impacting people's lives every day, but they don't really realizing it's impacting them. I don't have to take out money from my wallet. I can literally use my phone that I use every day and tap to pay. It's really, really unique and cool. And I wanted to be a part of that. I was working at the bank at that time. So some banks are very good at letting you transition your career to different areas. So I became the payments product manager to launch Zelle. Really, really exciting project, very complicated. I knew nothing about payments. I didn't even know what the word payment was, right? I had to literally dictionary it, Google what is payments to find the definition. But I have to say, I fell so deeply in love with it because of what I just mentioned is I was impacting so many people's lives without them even realizing I was impacting it, like increasing the speed of payments. And since then, I've held a lot of various cross-functional roles inside payments, operations, product, strategy, P&L, to various different types of payments, P2P, international transfers, domestic payments. And I spent a long time in payments. I'm not going to age myself. I spent a long time, but you probably feel the same. It's like, even though you spend so much time in various different roles, you're barely scratching the surface of payments. And I don't really feel like I would ever finish learning about payments, which is the exciting part.
Yeah, I don't think I'd ever use the phrase payments expert to describe myself. I think I started landing on payments nerd or payments super fan or something like that because I enjoy learning about it. But I think I learn something every day, and I've been in probably longer than I would want to say out loud as well. So absolutely with you there. I think about the mobile wallet and how that drew you to payments, which I love. You think payments really hasn't seen a lot of major innovations. You think like the card and the fees and ACH has been around since the 70s, and mobile wallet being a really major change to how we interact with payment methods. But what do you think is kind of the next big thing if it's not mobile wallets? Like what happens after that to get the next generation of chasing payments as a career?
I hate to be that bandwagon, but I think I kind of have to be. It's probably stablecoin. It may not make sense for the mass, but that is where the trend is going. Think of the complexity of international transfers. Think about the exchange and all the nuances associated to it. Stablecoin can really break through that, in my opinion. I'm excited about it, but I probably won't get into it for a couple of years.
I'm sitting back and watching to see it develop as well, but definitely watching it. I love that answer. And you've talked a little bit about working at a bank and not being in payments. You've worked at payments within a bank and now payments at a software company. How are those things different? How does the job change for you, payments within a financial institution versus a payments leader within software?
I think the biggest difference is scale versus nimbleness. Whenever you launch something or whenever you do something when it comes to payments inside the banks, you have to be very careful because as soon as you roll out any type of change or as soon as you roll out any type of product, you immediately get the scale. So you have to take the time, and people often say, why does it take the bank so long to do something? You often have to take the time to make it to get it right because it impacts so many people right away. I launched international transfers inside the bank and so on and so on. It took us a long time to get there. But once we got there, it was immediately hundreds of thousands, millions of customers that's on it right away, right? So it's less about trying to get customers to adopt. It's more about rolling it out in detail so that you are not getting financial information wrong. So that's the bank's power. When it comes to leading payments in a software company, I love it. I will say that right now. You can launch things in weeks versus months and years, and you can constantly tweak based on customer feedback. The downside is, you have to make sure you find go-to-market strategies and messaging that resonates with customers to convert them to make sure they understand the value of the products. But the most beautiful thing that I love is that, a lot of times that banks just they have a hard time saying that, for example, cash flow products. They have a hard time saying that I'm going to launch this cash flow product and actually give it to a small business in need. Small businesses go to banks for loans because they have a need. But banks often say, oh, I can't give it out to you right now because you look like you're not doing so well. But not doing so well is when you need a loan.
Right, right.
And so I love to be able to do that for our customers, right? We're really actually helping our customers when they have a need. When banks see them as a number, where we see them as businesses and people, and we're able to help them. I really love that aspect of it. And I love continuously to figure out how to talk to small businesses about the value of payments, like what resonates with them, what messaging to really help them understand the value of payments. I love those aspects.
And besides, access to lending, which I want to dive into more, but you said something interesting, like how do you talk about payments? How do you talk about the value? What messaging is resonating most with your customers right now?
We tried a lot of various messaging, but right now it's about automation, auto reconciliation, auto collection, so that it is not so awkward to go after your customer over and over again saying, hey, I haven't received that payment. How much time that takes to do that. That seems to be resonating with our customers the most, which is, saving you hours on administrative efforts so that you can spend Sunday with your family.
Yeah.
Your books aren't incorrect. They're accurate from the beginning. You don't have lost potential revenue from not having that money come in because you forgot to chase that payment. Those are the messaging that's resonating.
Yeah, and I think, and this may be an old script, but we used to run into this where we would pitch kind of administrative savings, as you were saying, as the value of payments, but companies would have somebody who had been with the company for a lot of years, and this was their job, was to, send out the notices and collect the payments and send follow-up. And there was this emotional association with this person and the savings. Is that still true, or is that kind of an old script and people have largely moved on from that?
I think it can be true, but it doesn't mean that automation is displacing their jobs completely, right? It's just shifting their job to double checking that it's accurate.
Hmm.
So that the time is back, not just for that person that's doing the administrative things, but also for the owner. And they can expand their business by leveraging that time to do something different, to invest in their customers, to invest in marketing efforts, to grow their business. So I think it is true, but there is a way to pivot the job versus completely displacing the job.
Sure. Yeah, great point. And going back to the embedded lending, you talked about lending. What's FreshBooks doing with lending today, or what do you want to be doing with it?
We launched a few lending products with partners. So we do flex loans, we do merchant advance, cash advance, and so on. We're at the very beginning of the journey. We've done a lot of pass through, but we haven't really embedded it fully. So our goal is to embed it, and our goal is to look at how to position the right loan offering at the right time to the customers.
Got it. And where do you think that goes? Like, what is this? Sounds like you've launched a little bit, but do you plan to fully embed it? Like, the trajectory for payments has been, right, I integrate with an outside party and kind of throw your transaction over the fence at them. I think the same thing is happening with lending for the most part right now, versus then we move towards, it's my name on the payments product. Do you think that that's where that goes for embedded lending for you as well?
Absolutely. I think we've learned from payments that embedding it is critical for its growth and adoption. At the end of the day, the SaaS customers trust the SaaS platforms,
Hmm.
right? This is your system that you use day in and day out. So the brand and the trust is really there when it comes to financial services products. And we've seen that with payments. Once we embedded payments, the growth is more substantial and we can take over more the experience, the control of the customer experience. So the same is true for lending. We tested it out. There is a need, there is desire, customers want it. And so embedding that is the next phase of growth.
Yeah, I like that. And referring to kind of that methodology that everyone, was adopting when we talked about integrating payments back in the day. And even some people do this now, which is this: I'm just going to plug in payments into my system and kind of it's just going to work, right? It's a bolt on. And everyone's going to start using it, right? There's just kind of this no effort field of dreams. If you build it, they will come kind of mentality. And I think what we've all found, or at least those of us that have been in the business for a while, is the answer to that is it's just a lot more nuanced than just let's offer payments, which I think is where a lot of people start. But based on your experience, like, where do people get this right? Like, what separates the winners from the rest?
I don't think it's untrue when people say I can just bolt on payments and grow revenue. It's not untrue. And I would say, the Tide Mark just came out with a survey that kind of proves that is true, but it's about how much, right?
Hmm.
So, Tide Mark was saying that 87% of companies with a fintech offering have payments in their portfolio. That's up 30% from last year. Significant. Payments is contributing an average of $4,000 in incremental revenue per customer for those who have it. It's really suggesting that payments is easy to integrate. And when you
Hmm.
integrate, there's a need, and that need is giving immediate value. 30% from last year, that means people are doing it. SaaS companies are doing it very fast and they're integrating it. So there's something there. But to your point, there's a lot more nuance to it, right? You can gain revenue. Absolutely. $4,000 incremental revenue per customer per year. Sure. That's low. And so I think what the nuance is, if you do it right and if you have experts helping, you can gain so much more from that. So for FreshBooks, we've had payments for 10 plus years, a long, long time. And it's always historically been rev share. And it took us a long time to grow to over 1 billion or a couple billion now in volume. And it really spiked during the pandemic, but it really took us time to get there. But most importantly, in the last 2 years, we really focused on our margin. And we've never done that before. Before we just did rev share. When happy to say that just in the last year, we actually grew our margin by 75% year over year.
Wow.
It's more than 30 bips in margin and counting. So that's what I mean. Of course, you can get value, immediate value, but is that value the most you can get? Absolutely not. So
So how
that
do companies maximize that then? How do companies move from the yes, you can get some to let's maximize that? What's the nuance there?
I think, you really need experts at the table. At a certain point, you do need to bring in, the GMs of payments or experts in payments or potential partnerships in payments and figuring out how to do it. But like you and I mentioned at the beginning, even in our many, 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 many years in payments, we're barely scratching the surface. And so it's about understanding payments ecosystem and understanding pricing, understanding how far can you price, sticker price wise. And then where's your optimization opportunities for networks and other costs? And then how do you grow complementary feature revenue? So think instant payout, think loans. How do you grow incremental feature revenue of payments? I think those are the critical things.
Got it. And earlier you threw out kind of 30 basis points of margin. And, we end up with, questions from SaaS platforms and private equity firms all the time that are, what should we think about for margin? What's good margin? And I think the answer is a little complicated, but how would you answer that question? You're hopping on an elevator with somebody who's an investor. It's like, what's a good margin for payments? How do you answer that?
Well, that's a really hard question. Depends on so many different things. Geography, the type of customers you're serving, fraud losses. Yeah, it's so many different things. I think, if I try to simplify it in a way, and I'm not saying this is right at all. Just I think how I simplify it is, here's what I'm able to get as a rev share in market, right? By partnering.
Yeah.
And if I'm able to double or triple that, that's pretty good. And that's probably closer to the top of what you can get is is my simple way of thinking about it.
I like that. So what you're saying is, for example, if I did the math out on, let's call it an 80% rev share, and I did the math out on that, and that's going to net me 10 basis points. I'm really going to go look in the market, assuming I'm doing a buy rate plus or cost plus relationship where I own it. I'm looking for somewhere in the 20 to 30 basis point range. And that's a mark of good. Is that
That's how
how
I
you
think.
would do the math?
Yeah, that's how I think about it. It's like when you partner with experts that know how to optimize their margin and so on, they're going to want to take their share. So their share is probably half or more of that. And so if you take that on yourself, you can probably get double or triple that
Yeah.
if you do
I
it right.
like Yeah, right. A little caveat of like, if you did it right. Yeah, obviously that could go upside down as well with the wrong partner, wrong rollout, wrong all the things.
Well, I'll tell you a story of what happened with us. So we decided to move from rev share over to IC plus pricing model, and we thought as soon as we did that, our margin is going to triple
Yeah, just instantly. Yeah,
just instantly,
yeah,
right?
yeah.
Jokes on us, we got less than our rev
And what was the cause of that? Was it the buy rate was too high, the cost like where were the levers off?
cost optimization, right? We didn't realize how much our partners was doing that for us.
Hmm.
And that's the nuance that I'm talking about. You think you can immediately get value. Sure, you can get rev share value. You won't get as much as you could possibly get, but it's not easy to get the extra that you're looking for. Make sure you have the support. Make sure you have the help before you go there. But yeah, so it was about optimizing the margins. It was about routing it smartly so that you're earning as much margin as you can possibly get.
Yeah, and while we're on the topic of cost optimization, like what are the big levers that SaaS platforms should be thinking about in terms of cost optimization? Like where do they start?
Again, geography, depending on geography, depending on the industry that you serve. What I've seen is probably MCC, Visa. It's no longer L2, L3, but Visa CDAP changes that are coming or has come. Those are the key areas of optimization that I've seen.
Yeah, definitely where we look as well. And when you say geography, do you generally mean like US, Canada? Are you thinking like national geography or where Visa operates? Is that what you mean by that?
Exactly. More
Yeah.
international applications.
Got it. Helpful. You mentioned when we were talking about margin and how to calculate that kind of risk management, losses, fraud losses. Like, how should most SaaS platforms be thinking about risk management? I think for some of our listeners, that might have been surprising to think about that as a calculation in there. So either not taking liability today or they're on a model where they're unaware that they're taking liability today, which unfortunately happens quite a bit. But where should they start thinking about that? How, if you were to kind of walk into a platform doing payments today that maybe doesn't have that expert support that you mentioned earlier, what would you guide them in terms of risk management?
Risk management is not easy. When we talk about margin expansion of payments not being easy, I think risk management is even harder. The nuances with it is even more than the nuance we talked about. I would say that, before you hit certain volume, and I would say probably 1 or 2 billion in volume at minimum, try to outsource that as much as you can. The business case just doesn't necessarily make sense. Like the amount
Hmm.
of resources you need to combat risk loss versus what you gain from it may not make sense. So I would generally advise like let your partners on the risk where you can. Yes, you're not going to get as high of a margin as you're expecting to get, but if you really business case it out with the resources you need and the systems you need to have in place to detect certain things, the numbers just don't necessarily add up. Now, when you do it well, the numbers do add up for sure, but just always weigh the cost of having your team, the technology costs associated with it, and the loss.
For those software platforms that are under $1 to $2 billion in volume, would you recommend, you said outsource that? Is that something different than just not take liability, or would you kind of put those into two different options that they have?
I think it's two different options. When I say if you're under 1 to 2 billion, when I say outsource, I mean leave it for your partner
Hmm.
uh, to own it. Don't take it on yourself. There is, you're right, there is the option to actually outsource risk. But again, you need to know what you're looking for. You need to know who to outsource to and how much does it cost and so on. I would just say before 1 to 2 billion, and if you're not a payments company as your core expertise, the numbers just don't add up for you to take any of that effort on and to learn about it. The priority should be learn about how to get payments margin, then learn about how to own risks yourself.
Yeah, and we totally agree. I think that that's right, and that's how we guide most software platforms. And it doesn't make sense. But I think the other thing that I would add, and that we generally talk about, is it's distracting. It's strategically distracting because risk management is not likely a growth lever for them. Now, for some, absolutely, it's right. The business model that they serve is too misunderstood by most processors, and it really can be a core differentiator. But I think for most software platforms, risk management is just straight distracting, even on top of the straight costs of labor and technology.
Risk management can be strategic when it comes to who you're willing to underwrite and onboard. But again, from a priority perspective, probably not the first one you tackle.
Yeah, yeah, totally agree. And we've talked a lot about kind of bringing in experts. When to the right time to kind of think about needing to have domain expertise in the building? We kind of have this $1 to $2 billion. It makes sense for risk. Where does it make sense for folks to have kind of dedicated payment expertise within the platform?
Yeah, if you think about it from, again, cost versus resource, benefits versus resource cost perspective. So if you're forecasting to be anywhere from 250 to $500 million in processing, right? Then it's probably time to think about, is it the right time to hire someone internally to at least know where to find the experts to get help from? Because again, not one single payments expert knows it all. There's so much nuance out there, like, but they need to know where to get help, right? Is it cost optimization? Is it go to market activities now? Like, they need to know where to get help. The reason I say 200, 500 million, if you're forecasting to be that from a total payments volume processing perspective, it's because, again, if you can grow your margin 20 to 30 bips, that starts to make sense from a P&L perspective.
That's helpful. I've also always thought about it also in terms of the life cycle or the ask of the payments initiative. So for example, even at potentially lower volumes, if you're trying to culturally transition from a BYO processor model or an integrated model to truly embedded, I think there's a case to be made for you need someone in that building to help kind of guide for that transition. Have you seen that as well?
I think that totally makes sense. But when that happens, you're forecasting to be above 250 to 500.
Do you think that math still works either way? So like 100 million, even if you're doing something transformational, you'd say, no, you don't need somebody expertise.
I think that if you're doing something transformational and you're still at 100 million, you're not doing enough of a transformation. You should be
Got it.
forecasting to have grow by that much, and therefore it's a makes sense transformation, and therefore you need someone.
Yeah, I love it. Where do you think this person, let's imagine, so we're at the 250 or 500 and we're forecasting there, we're hiring ahead of payments. Like, where does that person sit within the org in a software platform typically, or where do you recommend that it sits?
That's a really great question. There's so many different structures. I would say either within the CEO's org or within the COO's org. Revenue, orgs.
I've also seen it work well in product org, but one thing that I've always, and I'll say this really loudly, and apologies to all the CFOs listening, is I do not think it belongs in finance. And I think that's where payment goes to die. Like it just doesn't have the cross-functional connection that you may have under revenue or product or obviously a direct to CEO where you've got a seat at the table with the other senior leaders. I'm always kind of anywhere but finance is generally my pat answer to that.
I think that absolutely makes sense. It is. I love how I said an answer and you said an answer, and it both was not CFO.
Yeah. Again, apologies to any CFOs listening. Your orgs are great, just not a great place for payments.
No, it needs that cross-functional leadership. You're right.
Yeah.
It's because payments, even engineering, payments matter. Like
Mhm.
engineering the payments, how you code certain transactions matter to payments margin, right? That is not something that a CFO org would be able to understand.
Totally agree. I want to go back, kind of you started your career, and I want to talk a little bit about kind of your start was largely in marketing. And we talked a little bit about messaging in terms of what was resonating for your clients right now. But I kind of want to back up a little bit and give our listeners some guidance on kind of what are best practices around growing payments, right? We think about what's a more generic approach or kind of just good guidance that you could give software platforms around go to market specifically for embedded payments.
So, funny story that recently happened. We're trying to leverage more payments wording inside acquisition of our SaaS platform. And so I gave the team the guidance that please, let's start thinking about that in acquisition campaigns. The team launched, again, rightfully so. Payments is a very nuanced product, and you need expertise at the table for it. They put in the search term payments, and then a few weeks later came back and said, oh, the conversion is not going well. And what we realized was, oh, it's because people are searching POS. People are searching
Mm.
terminal payments, and we don't offer those because we do service-based businesses. It's mostly online payments. Payments is such a broad term.
Mhm.
If you don't know the customers you're serving, the segments you're serving, and the needs that you're serving, your go to market campaigns and your marketing campaigns could be so ineffective. It's just wasting money.
And so would you say that's largely a vocabulary shift then? And I think this is if what you're saying is this is vocabulary, I think this is a great case for embedded payments and why it works so well. So for example, customers might think about payments as POS or rent collection or invoice fulfillment and there's finding that right word. Is vocabulary then kind of where you start?
I think it's understanding your customers. So I would say vocabulary is important, but who are you speaking to?
Mm.
Embedded payments actually is defined quite differently in MasterCard or Visa or some banks versus how SaaS companies define embedded payments. I've heard it a million different ways described. So how do your customers understand you, and how do you get that? How do you, maybe it's all almost like a teaching the vocabulary, or with the mass and how the vocabulary is done.
So is it more about then understanding kind of the pain point you're solving or the need they have, or is it more about understanding how they've interacted with payments in the past?
I think it's all of the above. And it's understanding your customers, understanding their pain points, understanding the value prop that you have in the products you're already offering, and how do you tie it, and when do you tie what. When they sign up for payments is a very different value prop than, hey, you've already achieved certain point in payments. Now I'm going to talk to you about the additional features like instant payout.
I like that. More of a foothold then, and a launching point. And I want to finish up with kind of one last question. And thank you in advance for all that you've offered so far. And want to ask you one more, which is kind of if for our listeners, what advice would you give SaaS operators who want to grow payments business? They're listening to this. They're thinking about launching something, in early next year. What guidance do you give them?
You can bolt on payments and you can see value. But to truly see value, don't be afraid to ask for help. It does not necessarily mean you need to bring a dedicated full time person sitting in your org, but it needs to be, where to ask for help. Is it consultants? Is it your partners? Is it your processors? Ask for the help to guide you. Like we mentioned over and over again, doesn't matter how long you spend in payments, you won't know all of payments. It is a really exciting industry, but it is a vast industry with so much nuance happening. You could, a peer-to-peer transfer product is better for you versus a credit card product, for example. How do you know when to do what? Get the help you need, get the guidance, and don't be afraid to ask for it.
I love that so much. It's great advice. And Shirley, thank you again so much for joining us today. It's just been a pleasure talking with you.
Nice to talk to you as well. Thanks for having me.